First of all, I have to say that this panel represents, speaks to the point that Simone made earlier in the day, how women and females are involved in alternative finance. So something to be said about it. So irrespective of that, first what I would like to do, actually devote this last session actually to a more open discussion, because we would not give a chance to all of you to express your opinions and think aloud about alternative finance. But I would like to start with a short wrap-up and ask each leader of the panels to give us just a brief summary and reflection of what you heard today, and where you think what we know, what we don't know, where the alternative finance is going, what it means, and maybe let's start with Christos. You have so your big picture. If you find a microphone that works. Yes, so we started today with the big picture, what alternative finance is, what are the trends?
Actually, I'm optimistic about the market. The outcome of our panel is that the data shows that the market grows and it has great potential. It needs some balanced regulation in order to develop it even more. At the same time, it has to also look on the real needs of the society, so to do things for the people, and so we need a balanced approach towards the investors and the clients, the borrowers, and actually eventually it seems that the market heading to a more mature phase. Now we have some consolidation, but also it is true that you have some leaders in this market. You have China, you have US, you have UK, and the others follow from a distance. So we have to think a way of also bring the alternative finance in the attention of the EU regulators in order to do something within Europe that will help the market to develop even more in the rest countries of the European Union. Because now, with the Brexit, we will find ourselves, the rest member states, with a small market, alternative finance market, vis-à-vis the other great, let's say, markets of the world. So we have to do something in this aspect, in the regulatory aspect. We have to enable the market, but it is true that that alternative finance is something that it has great future. We have to help the institutions to realize their potential.
Yeah, I think indeed. Now, if you not if, but when UK leaves, assuming that this is the case, we hear that 80% of the alternative market will be actually taken out of the European Union. So we are really left with so it's a fast-growing market, it's true, but growing from a very small base, and it's still small. So those numbers actually are very small, and they are really on the less than half of the European Union member states have regulation or legislation or actually think seriously about it, and actually the rest is not. So there is quite a bit of imbalance between what's happening and also on the segments. Some segments, actually insurance is developing less. Some of the aspects of the alternative finance is developing less than others. So there's a lot of scope, and potential exists, and there is a lot of scope, and the question is what we could do or should be done in terms of supporting from the investment point of view, from the policy point of view. Piotr, you have been looking at the trends in fintech for quite some time, and you've led the session today. So what's your reflections? What do you see? We also had actually excellent cases. So what does it tell us?
Piotr Sełin, Fintech Trends. Me and my panel was given a job of assessing whether financial services companies have to go fintech or move towards financial technology, or will they die if they don't? And we assessed with Srini and all the others that at the moment, at least at the moment, fintechs are mostly working alongside existing financial services companies. So in effect, they're broadening the market, moving sideways or working alongside financial services companies, rather than directly compete with them. So, for example, if you're looking at equity capital markets, crowdfunding, ICOs, they're not necessarily serving exactly the same client that is being served by investment boutiques and equity capital market department at the large banks. The other thing, we also, I think Yanis mentioned that he sees a move, at least in his market, which was debt capital markets. He sees quite a lot of this intermediation where the structure is becoming flatter, the value chain is becoming a lot shorter, and a lot of companies that were brokers, in a sense, or advisors are just falling out of the market because there's no space for them as margins are contracting. In short, we also had quite a conversation about data. We had a Srini on the panel, and the Srini is credit credit scoring experts, and we assessed that data is a lot more important than it used to be. The right credit scoring and serving the customer in the right way requires information about the customer. At the moment, fintechs are quite strong in user experience, in serving the client better than existing financial services companies, and data is one of the ways to build advantages, data and the models to work with that data.
Yeah, that's. But we also heard that it's true that it's complementary. That fintech maybe it's very difficult to reinvent banking because banking is so strong. So fintech is developing alongside. But we also heard that banking will stay, but not necessarily banks. So there is a question about the future. The banking as a function, lending is probably the second oldest profession. It will exist forever, but actually it will exist probably in a different way. So that's any comments on this?
Yes, I have to say that if we look at the major data companies, data meaning companies that collect data such as Google, Facebook, these companies actually had a panel on one of my FinTech Trends meetings in June, and the question in the panel was, will the financial services market be taken over by data companies? And well, somehow it's obvious that it should be at some point, but somehow if you look at what is happening, it's not happening. So Google, even though they've got a certain financial services features such as money transfer, I mean, in no way they're actually competing with financial services companies. So it's worth taking into consideration that even though they can, it's not happening. The market is not really changing as quickly as many people say it would.
Yeah, that is true. What's surprising for me that actually we hear a lot about fintech, so we get the impression that it's really has overtaken the market, and it's the fintech is it. This is it, and actually it turns out when we look at evidence that it's much smaller, which is actually very surprising. So it is beyond the buzzword. It's happening. It's rolling up, but it's not necessarily as big as the buzz about it.
It all has to be consumer-centered, and if consumer doesn't want more fintech, there'll be no more fintech. I mean, the fintech will exist somewhere as a subsector, but unless consumer goes into the product en masse, it will not happen.
Yeah, that's a very good point. Thank you. Now, Milford led the session on social finance. You have been you have been watching microfinance. You have some critical view of microfinance. Do you think what you see and what you hear from today's panel and what you observe in, let's say, new or alternative social finance, does it give you more comfort that this is a more promising or viable option?
Is this on? Yeah.
Yes.
This is on. I tend to think, I mean, fintech, as you said, is still quite small. And so we're here at the start of what could be another revolution in development and poverty reduction. And as I said earlier, I mean, I tend to think back to the 1990s when everybody was full of anticipation and Muhammad Yunus and myths and eradicate poverty in a generation. And it all came to nothing. And so I think we're here at the start of another revolution, and I think we have to look ahead first to see, well, to look back, but also to look ahead. And to see and to try to, identify the trends that might in 5 or 10 years' time make us think that, this was a bad move. We've had mentioned Uber. Uber is one of the most antisocial development models, business models that you can ever come across. It is about the enrichment for a certain small number by informalizing and disintegrating the labor market. That's what Uber stands for. And if Uber's allowed to get in, then, and other business models follow along, then we are on a very slippery slope towards, 0 hours contracts and all that sort of stuff. So I think other institutions are now starting to creak a little. I mean, I don't know whether we talked about M-Pesa in Kenya. That has been celebrated to the rooftops. Some evidence is now coming in that there are serious problems there. And one of the problems is that the data collection, the metadata, is being used to sell people enormous amounts of things on their phone that they don't really want. Games, pornography, new loans, all sorts of stuff. And a lot of people with the mobile phones, the members, are financially illiterate and vulnerable, and they end up getting into quite serious debt. Now, it's only just starting, but it's either something that they'll have to nip in the bud very quickly, but it's very profitable, so I don't think they will, or else it's setting in a trend as the way things go. So I think if we look ahead, we have to look ahead and model. But also, what also came across to me is that we're not looking behind to see the benefit of economic history and of the models that we had in countries like Italy. We had a great presentation on ethical banking in Italy, and that came out of Italy's strong tradition of cooperative banking, which is absolutely a real development institution. But instead of looking at the Italian cooperative banks and modifying and improving and introducing them to the global south, we're saying, no, that's something from the old time. We want entrepreneurial, individual-led, new types of financial institution. I mean, I know that's part of the times that came in the 1980s with the rise of neoliberalism and that sort of individualism. But that sort of era is coming to a close now, very clearly after 2008. So maybe it's time to look back to Germany and how it reconstructed, and Brazil, and a combination of cooperative banks and development banks. These are the sorts of things that worked in the past. And instead of looking to sort of novelties and gadgets and fintech, and we should be looking at solid, real things that work in the field.
That is true, but also bravo. And I think Rudiger can actually, Meister, who is actually, can speak say quite a lot about how German Cooperatives Bank brought the stability and brought the actually local development to Germany. For example, we have also a lot of banks, cooperative banks in Poland. But to Piotr's point, the old models may be great, but actually millennials don't want it. They want to have a different way of transacting. I mean, there is also generational changes, and people expect. So there is maybe no customer acceptance, and they expect different customer experience. So maybe there's other aspects of why the change has to, and maybe those institutions have to change and actually retaining the models that exist, but actually moving forward and actually creating the customer experience that actually, let's say, the younger people expect.
No, I mean, I think a lot of fintech models, the technology is fantastic, but technology can be used for a positive way, but it can also be used in a very negative way. I've worked on projects with UNDP, for example, putting mobile phones in cooperatives where people can then connect with the head office in terms of, deliveries, when the fertilizer's coming, when the grapes are ready, etc., etc. Fantastic way of communicating and making a much more efficient institution. But there are also ways like, for example, Uber and Airbnb and all these other ones, which are really not about development as we would understand development. It's really about stripping away the last sort of elements of solidarity and cooperation and making every survival really very individual. And no sort of formal, destroying the sort of formal bonds of society. And we know that from the work, as I mentioned earlier, of people like Thomas Piketty. Inequality is the new challenge in the new times now. And the fintech it can either help it or it can really turn the clock back.
I mean, fintech is not anti-social, is not anti-consumer. Financial products markets are different. There's certain sets of markets that where fintech adds value. There are certain sections, such as, for example, these cooperatives in the cities, catering for people who prefer a face-to-face contact, that fintechs will never be, or fintech companies, technology companies, will never have a good answer to their needs. And I think most of the fintech companies completely are happy with that. Well, fintechs is basically only solving certain problems that people want solved. If you want to take a loan from your bedroom, sitting at home in front of a television, you can do it using one of these fintech websites, but you don't have to do it. I mean, if preferred way of people of doing business is seeing the local manager, that's absolutely fine. If they prefer a doorstep lending solution, which is quite popular still in many countries, that's absolutely fine. But by the way, these companies do excellent credit scoring by walking into people's homes and seeing whether people have television, washing machine, what their aspirations are. And this is absolutely fine. I mean, I don't think fintech companies as such are trying to have a solution for everybody.
Okay, hold that thought. Hold that thought before we get into a huge debate. Just to have the round of actually our summaries. Kaiser, you've been actually just leading the regulatory framework. So what's your takeaway from this?
Thank you. Before that, let me just appreciate the Microfinance Center's effort. I think we've had a very busy but very informative day starting from the morning. One day I think is not enough, even two probably for a conference like this, but we've been able to cover a lot of ground, so appreciate it. And thank you for having me here as well. Well, in terms of, before I get to the regulation, I mean, my take on technology is, I don't think it's competing against anything. The way I view technology is it enhances something which we are already doing. All of us here are for financial inclusion, through microfinance, through small business lending, through making populations bankable. Whatever we do, we want to get more and more people banked, or more and more people who have access to banking services. And in 2017, if we have a tool which can help us do that more effectively, more efficiently, and more importantly, enables us to reach out deeper into the market. The reason we didn't reach out deeper was because we couldn't fathom the risk of that segment of the market. With technology, we are able to do that. Now, like Milford said, that you can use technology positively or negatively. That's a separate discussion. You can use anything positively or negatively. You can use your laptop positively or negatively. So that's not the discussion here. The discussion is, how do you enhance what you're already doing? In the last 3 or 4 or 5 years, because of technology, we've been enabled to include 1 billion people more into the banking sector. So today there are 2.5, where there was 3.54 billion a few years ago. So that's the power of technology. And I also think that this debate about whether the fintech is the bank or the bank is the bank is also, I mean, again, it's not a debate we should be having. Fintechs in the financial sector, in lending, are a very small percentage of the overall lending, like we just heard, and which is true. They're growing at thousands of %, but they're small. And they will remain small because of their outreach again. They don't have that data bank of clients which banks have. And hence, those banks are needed, and hence we talk about partnerships today. So it's this understanding what we should be working towards is trying to get, I mean, even the cooperative model, you can keep that model, but enhance it with technology. So it's not mutually exclusive. Gabriel said that in his bank, Ethica, which is doing a wonderful job. He needs to leverage technology to reach out further. He's waiting for some regulatory framework to come in place. So I think that is what the debate should be. And then the second part of the debate is what I alluded to, is how can this be done? How, firstly, can banks start thinking that, look, we're the banks, who are these guys, technology companies, they're coming in, why should we partner with them? No, there should be ways and means to, I don't know if it's the right word, to educate these banks that they need technology to reach out deeper into the market. They're not. The banks are not covering. I mean, 10 years ago, no bank reached out to small business, for example. We did have microfinance institutions, but we didn't have banks which reached out to SMEs. They didn't because they had enough of corporate business. And frankly, let's admit it, the reason that banks started targeting SMEs was because the corporate after 2008 dried up. There was more competition. The margins on corporate and project finance decreased. So there was no business for banks. And I know that, as most of my colleagues would, because I'm on the other side of the table. And these banks came knocking at our door and saying, okay, we've heard of this sector called small and medium enterprise. We want to target it because we don't have any other business. That's how they got into SME. And there are a lot of banks which started lending in SMEs without changing their business model. And they suffered, they made losses because they were assessing the risk in the same manner. And again, this is something we all know, as they would be assessing the risk of a big corporate client, which is not the model. And hence the capacity building and these new. So this was 10 years ago. Come 2015, you have the advantage of technologies. How do you leverage that technology to further this lending to the small and medium enterprise, which is what 80% of the economies of all countries of the world. So that's the basis. Now, the good or the bad way to use it, that's where regulation comes in. And that, I think, is the job of the regulators. We heard the panel speaking. We had two people from the European Commission. We had obviously, the lawyer who was working on the regulations. My takeaway from that discussion and interaction with yourself also was, I think the innovators have to be proactive. They are the ones who have to make the case before regulators that we are needed in the financial sector because we can quicken the pace of reaching out or alleviating poverty or whatever by leveraging technology. However, we are unable to do that unless we have access to data, for example. We have some framework where we can partner with banks. We talked about the API platforms and the access for Fintechs to the data of the bank. So that has to be regulated. So we need these type of regulations. You need to develop them and help us develop, and we'll tell you what it is. So the pain points of the fintech are the starting points of the regulators, how they regulate it. So I think that was my takeaway from it. We had an interesting discussion. The regulators are also proactive. They want to help. Let's also admit that for all of us, this is new areas. A regulator regulating a classical financial sector also has a lot of problems. There's a lot of gaps in the way they regulate a normal cooperative bank or a bank. This is technology. So they have no idea of the technology, first of all. And secondly, it's again the financial sector where they've not been very effective anyway. We saw that in 2008. And now they've over-regulated everything, which is also the wrong way to go. So it has to be a continuous dialogue. So that's my takeaway.
Right, thank you very much. Thank you very much. And last but not least, Dimitris. Any comments from, you have not been on the panels, but any comments from the European Commission?
Well, I will take Kaiser's perspective, and I will make it more practical, in a sense.
Even more practical.
It was very practical. I will make it more practical in the way we work. I come from the policy DG of the EASY programs, which we support the microfinance sector and social entrepreneurship and impact investing. At the same time, as you understand, I'm not a practitioner in the field of microfinance, and it's not easy for me to follow every day the evolution of the sector. At the same time, we have specific policy objectives based on EU budget, finance from the EU budget, which means European taxpayers' money. And we also have the European Parliament, the European Council, that of course, with every euro we spend, we have to deliver results. These results have to be measurable. They have to be within the time set we define. And we are driven by them and from our policy objectives. This means that for us, every technological innovation in the financial services is important because it can help us build new models of transactions and make our products better, which might lead to increased results with the available budget. And if you have, I should remind you, of course, that within our policies, I mean, I come from the job creation unit. The support we want to provide is to vulnerable people that they are excluded from the traditional banking sector, people that they have lost their jobs, that they want to create the businesses, and micro businesses that they cannot access credit. As you understand, these are the driving forces behind our programs, and we want to achieve the best results, the maximum results, with the budget available. If technology helps us to achieve this, then we can continue, access more funds, deliver more results, and be able to discuss the new models, which we see them all the time as an opportunity. And based on this, I would like to thank you for inviting me and being able to say this, because I want to share with you that it's impossible for someone working in the policy of being able to actually follow such dynamic fields. That's why we have very close cooperation with the networks. That's why, at the same time, we provide operating grants to the network so that we can have insight, specific research, evidence-based material which we use to ask for financing for our programs. That's the way we do our work. And I had some fruitful discussions with colleagues from the IF, which are the implementing entity of our products. If there's an opportunity with the new forms of peer-to-peer lending or fintech to increase the number of transactions we have and achieve our results, and being able to support these target groups we want, for us it's a blessing.
Thank you very much. Let me open the floor to everybody now. And any comments from our speakers, or any questions that we would like to ask? One of the things actually that really makes me think, if this is so important, if this is such a great opportunity, why is it not developing more? Yeah? Okay, any Go ahead. Srini.
I'll add one comment following your comment, Peter. It's about, there's always questions asked about can big companies do, the likes of Google, the likes of Facebook, and come and disrupt the whole financial services. I guess it boils down to, what is the corporate committee actually looks at strategically, right? Sometimes I remember Google, when they originally started looking at lending space, they invested in Zest Finance a number of years ago. And everybody thought, okay, if they're going to basically look at Zest, ex-Google guy spun out, created a lending platform, then they're going to take over like lending will. I think there's always a challenge when you look at financial markets or things like agriculture or insurance. The market, the regulation required to be successful is a much deeper problem than running a tech company where you're kind of consumer facing. So another good example is in the agriculture sector, where when Monsanto basically bought Climate Corp, everybody thought, why would they actually buy in? Effectively then, Monsanto quickly realized you're running an insurance company, you're running a seed company as well, which is literally impossible. Anybody sitting at the board level would immediately realize you can't run like two horses in two different directions, because they do move at different velocity. So I think eventually, it does become obvious that, Facebook is doing its own kind of payments, for example. It's simple like a messenger payment. And Google started looking through ventures, and they're all kind of converging with the view that technology companies remain as technology companies, and that's where their focus is. And the way they can support healthcare, the agriculture, et cetera, is through venture capital. So in that way, you can actually issue all the CSR objectives you can achieve by enabling companies or the fintech companies to actually do what they're supposed to do. So I don't see them as a big threat. I see them as more, they are very critical in the way they actually set the infrastructure, the support, etc. That's how luckily one of our investment basically came from Axion Investment, which indirectly was supported by Bill and Melinda Gates Foundation. To me, I think having that indirect benefit actually is much more sustainable than always living with the fear that there's a big company which is going to come and wipe everything out. I just wanted to add that comment on the back of it.
Thank you very much. Rudiger.
Thank you, Piotr. I'm Rüdiger Meister. I'm working in the cooperative sector in Germany. And from that background and from that perspective, firstly, I would like to say, okay, it was quite interesting for me to follow the discussions through the day and see how often it came back to the cooperative spirit and the cooperative business model. So that is my first remark. Thank you for that. Secondly, I think it is perfectly right to say, looking at the cooperative business model, it's not only an issue of looking back into the past. The essentials of the cooperative business model are 2 or 3 things. One thing is member focus. One other thing is that the owners are at the same time the clients. And another very important feature is the democratic character. One member, one vote, as key features of cooperative organizations. If I try to connect it with the key focus of today's discussions, let me just give you one example with regards to what is lying ahead of us and what we all have to do. So one of you said that, technology and fintech can help to improve services of banks and of course also of cooperative banks. Let me stick to cooperative banks at the moment. I give you some figures. If I look at the German cooperative sector, we talk about 30 million customers and 18.2 million members in Germany. Germany has a total population of 82 million inhabitants, and out of these 82 million inhabitants, we have 18 point something members of cooperative banks. That is amazing. Now, if it comes to democratic principles and transparency, which are aspects which were quite relevant today throughout the discussions. So imagine what it could bring for democratic procedures and for transparency if we make usage of social media and social networks within the cooperative governance in order to involve members more than it has been the case in the past. So at the moment, we sometimes, if cooperatives have more than 2,500 members, they can switch to a representative system. So why is it necessary if we have the social media, if we can connect with them very, very tightly and very intensively through digital, through internet instruments? So there are a lot of options and possibilities that are connected with the new fintech approaches and with the new instruments. So it's looking back and it's looking into the future.
Thank you very much. Any comments from this? Because actually, do you have a microphone? Because, so is there a possibility for, go ahead, Kaiser and then Piotr, is there a possibility of convergence? Is it because the young people who start fintechs, they never heard of co-ops, and so how would they only live in the social media, social networks, they never heard of a co-op, so how would they actually be able to apply something like this?
I'll let Piotr answer that question, but quickly I'll also answer it. So if the fintechs haven't heard of the cooperatives have heard of the fintechs. So they can enhance what they're doing by finding out what is this fintech. So that's what I mean, you've got to be, it's 2017, it's not 1990. So you've got to be proactive in 2017. But what I actually wanted to say, and you can answer this actually more elaborately, is I just remember there's a movie called The Circle. I'm sure a lot of you have seen it. If you've not seen it, then you should watch it. It's a new movie, The Circle, and talking about the good and bad of technology and how data can be used for good or bad. Watch that movie. When we convene here for the next MFC, I think that will bring a lot of perspective of what the regulatory framework around data should be, which merits a separate conference on itself.
Piotr.
Excuse me if I'm hyperactive here today, but I really wanted to make short comments on the technology. As far as the voting is concerned, because one big problem when I think about cooperative banks is voting system, where, for example, a general meeting is called, it's far away, people don't want to come, etc., etc., etc. Technology is a great example of how can this be improved, basically, by introducing a platform where members can vote, and this could be applied to, I don't know, you probably live in some cooperatives where you've got 800 members living in a different country, maybe owning shares and there's a meeting where they have to decide on how they spend the budget, for example, whether it goes to making a loan better or putting a few trees in a garden, etc., etc., etc. Superior voting system, and this could be solved with technology, solves a lot of problems also for cooperatives. That's all I wanted to say, basically, the technical part of voting.
Yeah, it's a very good point, Milford. Okay, we all use phones, but we don't use analog phones. We actually we switch to iPhones. So I think the progress makes sense. Milford.
Yeah. I don't want to labour the point too much, but I do want to tie down this myth about financial inclusion, because it's been raised on several occasions as the driving force behind the fintech movement. Let's be quite clear about this. Financial inclusion has become the sort of guiding principle of a lot of institutions. But there are several problems. First of all, the evidence base for financial inclusion being of great benefit to the poor simply does not exist. Okay? If you were to look at some of the most financially included countries, you would be talking about South Africa, a complete disaster in terms of what they've achieved by over-indebted. The World Bank says it's the most over-indebted country. So financial inclusion there, full financial inclusion, has been a complete disaster. So the evidence base doesn't exist. Second, you have to look, it's always a good idea to, if somebody is repeating something and saying this is really good, just hang on a second, who is it that's saying this? And when you look behind all the institutions, Better Than Cash Alliance, all these, Center for Financial Inclusion, you find the same names. The Wall Street banks, the Visa Card Corporation, the MasterCard Corporation. All of these institutions lie behind it. A German journalist, Norbert Hering, just with his research published in Handelsblatt, the financial inclusion communique of the G20 meeting in Hamburg was put together by Citigroup and some people from Visa. So these are the people designing a policy for the benefit of the poor, but who are going to be the recipients of everything that comes out of it. So that has to be wrong. So let's be clear about financial inclusion. I've got nothing against people having more more techniques. I mean, in order, checkbooks and cards and all that. But let's not start making the idea that somehow this is all about benefiting the poor, because that's not why it's being driven forward with such gusto by Western governments and commercial organizations. It simply isn't.
Okay.
Can I react?
Yeah,
I know Pietro wants to react, but I'll save him the embarrassment. Well, two things. No one ever said that fintech is about financial inclusion. It is not. I have an app which is called Wealth Simple. That's about wealth management, nothing to do with financial inclusion. What I am saying is, us sitting here are about financial inclusion. So how do we leverage the fintechs to use it for financial inclusion? That's what I meant. They don't design it for financial inclusion. And the reason the Visas and the MasterCards of this world are leveraging fintech, because they have a payment service providing platform which can be leveraged. So it's all about how do you leverage it. I can leverage it for increasing my wealth, which is not financial inclusion. It's I want to make $1,000 into $100,000 through this Wealth Simple, which is robotics and artificial intelligence. It's fintech, but not financial inclusion. But we are financial inclusion enthusiasts, if you may, or leaders. So we need to make sure that we can enhance our ability to do that through fintech.
Okay, thank you very much.
Yeah, Aglai Hack, Credit Support Association, Austria. I'm not at the part of outflow, but of the inflow, to make this clear. Thank you very much, gentlemen, and the few ladies who had a very important voice today here. If we, I'm working in microfinance field myself in sub-Saharan Africa. So I know geographical problems, communicational problems, enormous problems, which actually exclude from financial markets. It's not only the loan sharks, it's technologies. So why do we not, you said you can use technology for good or for bad. We want to use it for good. If others do it for bad, let them do it. We do it for good. Why not use it to resolve geographical problems of inclusion into market, reaching out to of massive new markets for the world, and to the so-called non-bankables, because they are these massive markets. We can, I'm sure we can, reach out through fintech and technologies, networks or not networks, logarithms or not logarithms. This is a technical, let's do the details to the experts. Why do we not do that? Is there any relation, my second question, between the growth of alternative financial markets and value creation, added value creation? There should be. If there is, we will be able to use financial technologies and new ways of including these massive new markets. Is there anybody to contest this, please?
Okay, so two questions. One is that where technology is neutral, how do we use it for positive? How can we actually apply it in a positive way? Okay, so that's one question. The second question is fintech, if I understand correctly, is fintech just replacing replacing the old? We're doing the same thing but in a different way, or is it completing, adding value? So is it just a replacement or is something new? Who would like to tackle this? Any thoughts on this?
We have two different views.
Okay, why don't you start, Kaiser? Different views actually are interesting because that's a nice debate.
I think.
Where would you like to start?
I'll start with whether it's complementing, whether it's eating into existing, or.
Fine.
But I've said it already, by the way. It enables an institution to go deeper into the market, which by definition means you're getting to people who weren't reached before. So that's adding value. It's not eating out of an existing, bank. The second is it can help existing financial institutions in the formal sector to improve the quality of their portfolio. So again, we have an example of Bank Ethica, but there are many other examples also. Through better risk assessment, you can improve the quality of your portfolio of an existing outreach, which means that the profitability of the bank, and they can dish out more loans. So it is complementing even in both cases. So you have a new market and you have an existing market which can be enhanced. So it's a win-win.
Okay.
However,
well, I think, clearly there's added value from a lot of these fintech initiatives in the global south and everywhere else. That's not the issue. The issue is who actually appropriates the added value. And I think there's a comparison that can be made with, let's take an example at random, subprime lending in the United States. Now, that was justified by the big banks and the originators as being of benefit to our minorities who have been kept out of the housing market. And if you believe that, then you'll believe in Santa Claus. It was done with a very clear motive in mind, and we all know the results of that. So the question there is not that whether fintech can actually create added value. Clearly it can. It's how the added value is distributed at the end of it. And if it's generated with an idea to be distributed upwards, then perhaps that's not a good idea. If you look at, say, Banco Compartamos in Mexico, a lot of high-tech stuff has been done with that. They've really computerized it and digitalized it, and they make massive dividends and profits which are all then taken out of the country. And demand is lost to the poor communities which are paying 100 to 150% interest rates on their loans to poor women in poverty. So massive value has been created with the help of fintech, but it's all disappeared from the community. So that's, going back to the first question, that's one of the major advantages of the cooperative model, is that it recycles value that's created within the community that creates it.
Katarzyna Pawlak, Microfinance Center. Thanks a lot for today's discussions and especially now the panelists. I wanted to comment, referring to just what Milford said, that we look at different models and more of the kind of private ownership type on the fintech side, more of the traditional models on the cooperative side, but in response to Uber and Airbnb, we know that there is a new movement of platform cooperativism emerging in other sectors, not necessarily financial services, and we know there is a lot of struggle, especially on the side of providing funding for this kind of venture. And I would, like my comment would be, I hope at the next Alternative Finance Forum we will have some examples of those platforms, cooperative platforms, sharing their experience. So this is my hope. And my other question is what we can do actually to encourage more experiments of those cooperative platforms in the financial sector area.
Thank you. So next time we'll be talking about co-op techs. Any comments? If not, Christian.
I just want to make a comment on Milford's statement that we did a lot of harm by trying to achieve financial inclusion, which I tend to agree. I think that we had an ambitious goal, but as humans, we usually learn by doing mistakes. And unless you try and you have a clear goal in your mind and you don't try, there is no progress.
Well, if I could, I mean, I think we have to try. History is about learning from our mistakes as well as our successes. But if we don't learn from our successes and we blank them out of history in order that new types of innovations come in, which we know are not as good as the old ones, but will actually benefit certain parties that the old models won't benefit, and I think that's a description of what we're talking about here, then we're not actually learning anything. For example, I mean, a great development bank is the Brazilian Development Bank. Everybody in the global south, that's seen as a fantastic development bank model. But in many countries, you know, they are banned by, such as USAID and other institutions, from really taking that development model and using it to get themselves out of problems. And they're told, no, stick to private sector solutions. They're not allowed to learn from the success. Look at the Chinese model of development banking. Fantastically successful. When I suggested to a panel like this that we needed to bring, in Africa it was, where we needed to bring Chinese consultants in to talk about financial institutions because their 4 development banks have created the most important economic miracle in history, I was absolutely shouted down. You know, no, because we're not learning. No, we need something private. And so whatever works, we should look at and adapt and adopt rather than, bring along innovations which come from motives which are not always about, developmental.
Hello, my name is Rock. I have different point on fintech. In 1955, American bank set first informatic system. Then in 60s also ATMs came. Credit card also came. These all are fintechs. So basically in the 90s, majority banks run on information systems. Then web came. So online banking came. So this is just, I think that majority of us who came here today use financial technologies to arrive here and pay everything. maybe not, maybe 20% of us use cash. Otherwise, I think banking sector is already taken over by fintech technologies. The second thing is, young generation is addicted, and it was born with mobile phones. Though the African systems are majority the same as SWIFT on just SMS technology. It's not big technology, not even blockchain. Now there is, but the starter was not. So I think the big change in banking perspective will come from Internet of Things, universal income, and robotics. Because I think this will be the driving change also of the digitalization of working places in banking sector. Nonetheless, all the trades and derivatives are done with informatics, so it's today's fintech technologies, they already taken. But I think that from other perspective, because the banks were not liberal, they were sticking to old models, business models. I think we should talk about new business model for the banks. And these new business models are coming from the customers because they need it. Like years ago, I was also here in Warsaw where FICOMPAS had ESIF conference and was director of BNP Paris Bank. It's kind of huge bank. And he said, we are starting to employ experts in agriculture because we see that banking and financial educated people don't have knowledge about how these businesses are run, so we can give them better financial instruments to run the businesses. And I think that today, basically revolution is not in fintech, but in customers leading how they want to make payments, how they want to live life, what kind of style. Thank you.
Thank you very much. Any comments to this? Well,
just wanted to briefly say, I'm looking at technology for a good few years, several years perhaps, and the way I look at the finance today, the way I see technology is that the innovation is not a problem. Whatever you conceivably need is already there. You know, if you need cryptocurrencies, if you need machine learning, I won't use the word artificial intelligence, it's already there. If you say that we need robotics or IoT, I just wonder, what do you actually mean by that? Because as I said, and as we sort of established, it is not lack of technology, it's a social follow-up behind the technology. It's the question of whether people will want to adopt certain solutions that are already here. For the benefits, you know, and I just wanted to ask. I wanted to add as well on the, you know, speaking in terms of technology, we're speaking about credit scoring, better credit scoring. Milford there mentioned that if there was a better credit scoring before the subprime crisis, perhaps the subprime crisis would have not have happened. That there are certain small things that can be improved on the technology side, such as, for example, cutting costs from the operations of payments companies and. David was here, he disappeared, but he's a good example that certain companies, certain fintech companies are not building something, you know, extremely novel. They're not building artificial intelligence, which doesn't exist, by the way. They're just doing a simple things that cut costs and improve people's lives, such as cheaper and more efficient payments, for example.
Any more comments?
I would like to say one thing. I think that technology in general is good and depends on how you use it. I used to think of these things very simple. I mean, if Leonardo da Vinci was in our days, he might have invented 1,000 things more than what he'd done. So in that sense, technology can always be more, make people be more productive. When it comes to, I think we in a way, we overstress the role of technology and sometimes we tend to forget the fundamentals. Markets always come hand in hand with central bank policies, credit policies, and fundamental macroeconomics. So what I'm saying is that we should use technology in order to get the best out of it, be more productive, The way I see it, from what is described now, it's not about fintech and more financial inclusion in my mind. It's more about using more efficiently resources, being able to do better credit scoring and save time, save resources. At the same time, we have to stick to the fundamentals and see how the markets are doing and what macroeconomic policy is always important in our field. And one thing that I'm putting in one more issue now, that's we shouldn't because it's also fintech, social finance or more. We shouldn't forget the social finance market. We haven't touched on this thing at all during this panel, and maybe it's not the right time, but
maybe it's the next conference.
Maybe it's the next conference. Yes, because it's. I mean. Yes, yeah, I mean, yeah, because just to mention, I'm taking you to another topic now. It's just that we have like, what I want to say is that we have like, I see a latest report from Credit Suisse Research Institute on Global Wealth Report of 2016. We have 256 trillion total wealth, and only 0.1% of this wealth is actually managed in a social way, meaningful, impactful way. That's another topic too, because it's social finance and we haven't touched it.
Absolutely. I don't think we will be able to touch on the social finance, but actually impact investing in social investing actually is another buzzword that you hear everywhere and a lot of it. And actually, again, the numbers are not there yet. Okay, any more questions or comments or suggestions, recommendations? And I am blind. Simone. Okay, so I can keep mine.
Yeah, I have a question on the sustainability of a lot of these fintech companies, and especially when they do have a focus on inclusive finance. It's because what I think what is happening is that a lot of fintech, which are geared towards this inclusive finance, which social finance, their business model is just not as profitable, or their ROI is not as profitable as a lot of other businesses. And so, and this is what you see with a lot of crowdfunding platforms, that even though that they are extremely lean set up, and they actually are struggling to go to the next phase, because there are very few possibilities to go out and attract funds with a proper ROI. So if you, it's the same as what Credit says. They had about 40 million of the Dutch government in order to be able to set up this alternative finance system. So how could the panel explore on that? What the countries themselves or the governments themselves put in as financing these fintechs, these private fintechs initiatives?
Interesting. So it's an interesting, growing, but not necessarily, not always profitable. So what do we do about it? Any ideas? Any comments? Or just take it as a reflection?
Sorry, I didn't hear the question. If you repeat, perhaps I'll have comments. I didn't hear. It was a fintech question, perhaps I can answer.
Yes. Simon, one question, in one sentence.
So what is your view on how to get a lot of these fintech companies who have a focus on social, inclusive finance, what's your view on getting those sustainable?
So a lot of fintech companies actually are starting, they're interesting, they go into interesting niches, but actually they may not be necessarily sustainable. Mm-hmm. The margins are low.
Mm-hmm. Okay, peer-to-peer lending is low margin business which may be sustainable, maybe not. Also there are platforms which suffer from the reputation risk. If something bad happens on the platform, even if it's only a fraction but receives a lot of attention in the media, people then may not want to use such platforms, and the world of technology is littered with bodies of companies which were basically quite all right, but something happened and they lost business very quickly. I think current Polish government is doing the right thing by trying to pump money into development of these companies. So so that these companies or certain entrepreneurs can have a second and third life and learn from the mistakes. And even though this is perhaps not very right in principle, because why would you sort of throw good money after bad money? Then if you look at it in scale, it's the Polish government, they pay about 2.8 billion zloty, and it's not terrible amount of money compared to the budget of the country, you know. At the same time, this is a huge amount of money for entrepreneurs trying to use different models and experiment with those models. That's all I can say on this.
Okay, thank you. So, yes, so there are other experiments with sandboxes, accelerators, and the question is, you know, yeah, Piotr, Oliver.
I would try to answer that with the view in mind of the regulators and the Commission is that unless it's Germany, France, or the UK, your market is too small to ever have a sustainable peer-to-peer market, be it crowdfunding for securities or lending, probably even microfinance. It's really low margin, high volume, and ideally high value transactions that the only way some of these platforms will be able to scale to become, you know, long-term sustainable and also, you know, be able to defend themselves against attacks from other financial institutions if they can operate cross-border, which we heard already is not possible, neither in the security market nor in the lending market. So this is really something that needs to be addressed if you take this idea of fintech seriously. Otherwise, it's going to disappear. We see all the platforms disappearing left, right, and center. Yeah, I don't know, Tanya mentioned that this morning. From 320 platforms they saw 2 years ago that were doing serious business, there's 200 left. That's just, you know, what's going to happen.
Thank you, Barrett. That's an important point. You said big markets, but even in the US, I mean, the peer-to-peer lenders, most of them actually have shown losses consistently for the past few quarters. So actually, that's the question: is this something else? Is it so socially important that we actually provide subsidy for? Is there a mechanism of reaching out that is unique and actually has the potential of reaching out? No. Kaiser, last comment.
Is it the last?
Unless you don't want to have a cocktail.
I've got a good one, 30 seconds. Just let me say one thing. If you look at peer-to-peer platforms, quite a problem, which kind of Milford addressed in a way, is securitization. In a world of banking, such as cooperative, where the lender knows the borrower pretty close, the relationship between lender and borrower is better. There's a better way of actually observing what's happening to the loan throughout the loan's life. Platform and technology, in a way, enforce securitization. And if you securitize, if you cut the initial original borrower from the original lender, that link is broken, and that may lead to those problems where you've got a bunch of the securitized loans and nobody really knows what's inside. Bankers are buying them, but they don't understand them. You know, they may use data to make sense of it, but it's not as good as actually knowing the person who borrowed the money. Thank you.
Kaiser.
Yeah, I mean, I think he's answered partially. Again, my view on fintechs is that these are platforms. They, by themselves, are not institutions of scale. And those platforms have to leverage institutions of scale. And I think we've been over that a lot, what that means, the partnerships, etc. So I think that is what should happen going forward. And just if you said these are the last words of wisdom or whatever. So today we spoke about fintechs.
Social finance too.
And social finance, but the technology part was fintech. The broader concept is digital financial services. Again, the next conference that you have, digital finance services, of which fintech is just a part. So we spoke about lending and payment, little bit of payment, but lending. But digital financial services is much more. It's also of digitizing processes, back office processes. We haven't touched on those. That will enable enhancing the ability of institutions to reach out more also. So there's a whole host of things which can be digitized within an institution, not just a lending platform. So that's one part of it. So I just wanted to part with that
Thank
comment.
you. Although there's a lot actually happening in payment systems, actually in digital services and payment system, there's a lot actually happening. But thank you for that comment, and actually thank you for making a distinction between a platform and an institution, because it's not exactly the same thing, and we may actually confuse one with the other. Unless there is another pressing comment, or suggestions, can I ask okay, Christos. Okay, but this will be, okay, you will start, just one last takeaway from this today's, and maybe recommendations, which way we should go as keep that discussion going in the future.
Sure. If I can say something, sometimes it's better to listen, and I listen a lot of interesting things. What I would like to say let's say, as a last quote, it is that the world we live is different. Now we live in a global village, without boundaries, without borders. Everything is interrelated. And the technology is the glue that binds many things. To think that we live or act in our, let's say, small little world, it is a mistake. If we do not evolve, we will extinct. So we will disappear. Yes, that's the truth. It's a fact of life. And crisis is not a bad thing. The subprime loans create also new things. The fact that now the mammals dominate the world is because the dinosaurs disappear, because an accidental thing happened. So crisis is not a bad thing. It's a way to evolve. And now the fintech, it came in an era that it came to cover some real needs. The market will evolve, will mature, will consolidate. At the end, some will survive, some others will leave the market. Something new will come. But the technology is here. The technology will not disappear. The technology will bring new solutions. And if there are real needs, then there will always be innovators that will give real solutions to these needs. So not be polemics, not try to bring negative, let's say, arguments or judgment of this. It came to happen. Consumer has changed. The world that we live has changed. We should see this thing with an open mind and try to get the best of this change.
That sounds actually like a very good summary. Any more comments? One final word, or shall we take it as a collective summary of the panel? Okay. With that, I would like to first of all thank you, the panelists, and thank you all of you for coming. We tried in a very kind of short and ad hoc way, in some ways, to run through something that is actually a huge topic. I mean, the fintech, the alternative finance, whatever you call it, is really a growing business and has a lot of so many different aspects, from technological to social to regulatory, and we tried actually to take a sample of it and take a feel what it means, and also what it means for the work that Microfinance Center has been doing, for the European Bank has been doing, and what the Commission is doing, and see how that fits into what how we can advance the future of, whether you call it social inclusion, whether you call it digital finance, whether you call it social advancement, whatever it is, it has lots of applications. And so that was, I hope it was useful. We learned a lot by preparing for this event, and also organizing the event and listening to today's discussion. Was actually absolutely fascinating discovery. How many things, how many new things, and how many new thinking is actually taking place in this area. And how much, and actually what Rudiger actually reminded, how much we have forgotten that it all existed in many ways, and in some ways we are retooling the old ways, which is also fine. I mean, it's a legitimate way of doing things, actually coming back to things, but it's in a slightly different dialectic kind of way evolves. So thank you very much for that. I would like to ask Luis and Grzegorz to officially close and the event and give their final words.
Okay, so I'll be very short since the hour is already advanced. I will not in any way attempt to summarize a day like this. As Piotr said, you know, it's a very fascinating area. I will take the Kaiser's words when he started the panel by saying maybe it should have been 2 days, maybe even longer, because there's such ground to cover, and that's exactly the feeling. So in that way, I've learned a lot, so the glass is half full. There's a lot to learn, and there's a lot for me to learn still, so the glass is half empty. But I think the most important thing is we can keep refilling the glass by the next conferences that we may organize, and all the networking, all the different forums that exist for keep learning and keep evolving in this area. A special thanks to the Microfinance Center for having organized this and having done an excellent job. A special thanks to Piotr as well. Everyone, you know, and I think that, you know, we should say a special thanks for all the fascinating speakers, panel moderators, everyone. So.
Yeah, if I could have my final word, I also would like to thank all of the speakers for making these fascinating speeches and comments. I think it's important that, you know, just we also are, you know, just proactive in whatever we do, in however we shape the future. We actually should imagine a more just, a more solidarity-based society. I think it's critical because, in a way, we are children of as Milford said, of this neoliberal paradigm that atomized the society, and many of these ideas that we discussed actually reflect that. I think it's really critical that we assess, you know, just what impact these initiatives have on communities that we live, on the society, on our lives. So this is my final thought. So thank you again, the speakers. I would like to thank all of the participants from here, from Warsaw, from Poland, but also those who actually came here from different countries, whether from different countries of Europe or Asia. I think Singapore is the furthest away. Thank you for making this trip to Warsaw. I would like also to thank European Microfinance Network for partnering with this conference, and of course European Investment Bank Institute for the very fruitful, very good collaboration, and we're hoping for more. So
cocktail.
Exactly. Cocktail and drinks. Thank you.
Thank you very much.